The Nigerian Sovereign Investment Authority, of course, released its returns for 2022. They're down. So total assets down 15%. That's to 1 trillion. Income down by 28% to 111 billion. Profit for the year, 33.35%. Is this good, bad, or ugly? We have Patrick Atuanya, who, of course, is the publisher, MoneyCentral Media Limited, that wrote a scathing article about the returns of the NSIA. Patrick, you're welcome.
Yeah, thank you, Rogers.
I take it you're not impressed.
Not at all.
Why is that?
Okay,
they still declare profits. They're just down 33%.
Yeah, so we believe thanks for having me once again. We believe the NSIA is not maximizing its potential for returns in the Nigerian market, seeing what's happening globally. And then there's a trend of lower and lower returns over the past 4 years, right? So in 2019, NSIA was down, returns were down 27%. That year, the S&P 500 was up about 33%. Then in 2021, NSIA returns were down 8%. And in 2022, now 33%. So I think the problem is the asset allocations, how they allocate their capital and how they are not maximizing it for profitability.
Okay, what is it? Listen to this quote though, because Patrick, 2022 was a tough year. Say, look, the 2022 fiscal year marked by unprecedented shocks: COVID, Russia, Ukraine, food and supply disruptions. Yeah. What about their justification for this tough year? There was also soaring inflation and monetary policy tightening.
Okay, so I think that's a red herring by the NSIA, because their exposure to the global markets is only about 7-8% when you look at their asset allocation. So they have 3 funds, right? You have the infrastructure fund, takes up 50%, future generation funds takes up 30%, and the stabilization fund takes up 20% of their total assets. So where the global downdraft of last year might have affected will be from the Future Generations Fund. But when you look into that fund, it's only about 30% of the fund that is exposed to global equities. Okay. So the rest is like, they have some cash holdings, they have some fixed income, they have some private equity holdings. So again, the allocation is a problem. And also when you go to the infrastructure fund, they have this crazy situation whereby they've put out a $200 million innovation fund, which they call it, whereby they want to invest in Nigerian early stage companies. Okay. And we don't really see how that's going to move the needle, because we think you should be investing in stocks or companies that are going to change the world in the next 20, 30 years. By the time we come to the end of the oil age, right? So your Teslas, your SpaceXs, AI, right? ChatGPT is big now. So they're not really doing what they're supposed to do. So what the statement they put out is a red herring, because they don't really have that exposure. And our issue is, on the way up, they underperform. When the global markets are going up, they underperform. When the global markets are going down, they also underperform. So what is the issue? So I want to bring up the Norway Sovereign Wealth Fund. Okay. I mean, they lost about 164 billion last year. Okay. But I think I know where I'm going to go now, because if I look at the quotes from the CEO of Nordsbank, he said the exact same thing that the NSI said, that the market was impacted by war, inflation. So I bet you're not going to tell me that their exposure to the global markets is larger than the NSI. Yeah, sure. So the Norway Sovereign Wealth Fund has 70% of their assets exposed to stocks, right? Same thing with Saudi Arabia is about 72%. So these guys have those large exposures. And as long as they don't sell, once the market rebounds, they're going to also reap the upside, in the meantime. And if they want to add more to their position, then they're getting it at the lower average cost price, for those stocks. So again, the NSIA is in a different situation. When you look at their asset allocation, it's just suboptimal. They're not doing what they're supposed to do. Okay, let's look at a fund that did well in Dubai. Dubai, I think it's the ICD. They returned about, well, it's half year 2022, so 61% year on year. Net profit 10x from 2021. I think we have the Sheikh Hamdan, the chair, Sheikh Hamdan bin Mohammed Chairman. He said 61% growth in ICD revenues, more than 10 times increase in profits, despite
the global economic slowdown and uncertainty reflects the resilience and robustness of Dubai's economy. What do you make of that? Is it majority of their funds locally invested?
Okay, so Dubai, one way you can look at this is you are diversifying away from oil. So you want to get your economy, like your real economy, diversified. So you invest in tourism, you invest in real estate, you invest in, tech, try to bring some of these companies to Dubai. So I think that's what they are doing. Again, in our own side, the NSI is also really not investing in Nigerian companies. So if they're looking for companies to invest in, we have quite a few companies that they can take equity stakes in. I think one of the most innovative companies for me right now is MTN, right? MTN Nigeria is investing for the future. Every year they do capex of the range of 200 to 300 billion naira, just to keep up with the growth, right? And then there's a organic growth to them because in 20 or 30 years, you have almost 400 million Nigerians. So why is the NSI not in MTN? Why are they not in like a Dangote, like Dangote's fertilizer plant or a Boa Foods or something? So we have big companies that can take some of the capital, that can, digest some of the money they have to invest in, but then NSI is missing in those places.
If we look at some of the indexes worldwide, because you're saying that it's their exposure global is only about 30%, right?
No, I said about 7%.
7%, fine. Yeah,
so 30% of the future generation fund.
Of that has the exposure to go. So, okay, but then so you would accept, because we look at some indexes, let's just jump through some.
Sure.
NASDAQ last year, 33% down. What else we got? Let's just rifle all through these. The Russell 2000 index, 21% down last year. I think the Dow Jones, okay, no, this is the S&P 500, 19%. Dow Jones 8%. Even where Europe? Should we go to Europe? Europe stock 600 12%.
Yeah.
MSCI Asian Index down 16%. I mean, it was all nasty last year. So how can one navigate this type of? Is it to limit your exposure or
Oh, no, not limit your exposure. Actually, have a more diversified exposure base, right? And then don't put your money in hard to value infrastructure funds that doesn't really move with the market like the way the NSI has done. So for me, if I'm going to look at what happened last year, what I'll say is if the NSI was actually had about 70% of its assets in stocks, then this year they're going to get the rebound, right? The markets are going to rebound this year and they're going to come up. But more importantly, where you have innovation happening in the world today, AI, biotech, robotics, space technology, right? The NSI is missing. When the oil prices finally, run out, when the oil goes to zero, or when the oil prices run out, how do you take advantage of that fall in oil prices? Because by that time you would have been able to diversify your economy into these fast-growing areas in the world, or your asset base of your sovereign wealth fund into the fast-growing areas of the world. That's what we are not seeing the NSI do.
We have less than a minute to go. You've seen the resistance to ChatGPT.
Sure.
Elon Musk wrote a letter saying that we should worry about AI and where it's going. I mean, it's early stages. So isn't this risky to be putting money in these advanced stage?
Early stage?
Early stage, rather. Excuse me. Early stage. Thank you.
Yeah. Okay. So if you don't want to do ChatGPT, what about Tesla, right? So the European Union came out the other day and saying by 2035, they're going to get rid of all combustion engine vehicles, right? The US is going big with emission standards and improving mileage per each new car that comes out. So it's almost is demand destruction for the oil industry. So where is the connection between an oil fund and we need to move beyond oil? I don't see that. I don't see that connection.
Gotcha.
Either.
Patrick, we're going to hopefully have the CEO of the NSI
please.
with the right of reply. Patrick Atuanya, publisher, MoneyCentral Media Limited. Thank you so much for joining us.
Thank you so much.